You're listening to Beyond the Box, Unlocking Creative Mortgage Solutions. I'm your host and guide, Brett Clark. We're going for smarter strategies, creative financing, and solutions that get deals done. Whether you're a realtor, loan officer, or investor, it's time to think big, act bold, and close more deals. Let's dive in. Today, we're diving into the exciting world of fix and flip loans. Whether you're looking to transform the distressed property or a realtor working with buyers in this space, this episode is for you. We're going to explore fix and flip loans, how they work, and share real-world success stories that show just how profitable they are. Now, you've gotten through 45 seconds and you're like, what the heck is a fix and flip loan? Well, fix and flip loans are short-term financing tools designed for the real estate investor. They allow you to purchase, renovate, and sell or refinance properties quickly, often within 6 to 12 months, and there's no prepayment penalties because they want you to turn the cash fast. This is where people are making quick profits with the right properties. The loans are based off of the after repair value, we like to call it ARV, which is the estimated value after renovation. In a builder situation, this would be after build value. We're still going to call ARVs. This means that investors don't have to use as much of their cash and can borrow more of the money to keep the projects going, especially when we realize that we're reimbursing them for all of those renovations, and it is making the process move very quickly. The goal here is speed and flexibility. Most fix and flip loans can close in 10 to 14 days as long as all of the investors and all of the parties are moving quickly, and that is crucial, especially for foreclosures or properties that you can get and bid on at the county steps. So we have the what. Now, how do they work? Let's break down a little bit of the structure. Typically, these are high leveraged loans, and that means we're doing 90% of the purchase price. This would be a 10% down payment on an investment property. If you think about it, that's crazy, especially when you factor in that we're looking at 100% of the rehab costs. That is a little amount of money of what they're bringing. The best part too is during the term of the loan, it's interest only payments only on the amount that you've drawn any period of time. And so at the beginning, your interest only is on that purchase. And as you make renovations, the interest only will increase, but you're not paying on that entire amount the entire time. So for example, when you're getting into this, if you're looking at a $200,000 purchase price and planning $50,000 in renovations, you might only need $20,000 in that down payment to get into a fix and flip loan. And when you look at that house potentially selling for $300,000, you're already looking at major profit. Now you might be asking, is this too good to be true? But let me share a deal that is a friend of mine and what they did in Illinois. So it was a $235,000 deal that they got off the wholesale market. And the plan was to do cosmetic updates, like a kitchen, a master bath, those type of things. And after a month of securing permits, 10 weeks of construction, the home was listed for $425,000. So breaking this down, $235K for a purchase, $35K out of pocket, and a net profit of $90,000. What a great return. That's almost 300%. Can you think of any other way where you could make that same profit in 3 to 4 months? So if that isn't enough to convince you how powerful this is, think about this. An investor was able to buy a note from a bank for $50,000 where the homeowner was behind for 9 months on payments. They then put $45,000 into the house and sold it for $150,000. So that's $95K in, $150K out. This deal highlights the flexibility of a fix and flip loan and the importance of seeing creative opportunities where others see the obstacles. So let's bring in the tips. Fix and flip loans are not just for investors, realtors, and loan officers. This is for you too. As realtors, the partners with investors or partnering with yourself for your future, identifying properties with high after repair values or ARV potential is massive. If you can find more of those, investors will be loyal and continue to pull back into you. When you're thinking about them having to spend $20,000 to $25,000 per long-term hold, in this situation, they're only putting 10% down, and then you get to list it again. This is a buy and a sell for you, and that is why it is so valuable for realtors. Building that relationship with lenders like myself, or there are so many out there who specialize and understand fix and flip financing, can create seamless deals where you're getting paid on purchases and sales. This is huge for your own income. Loan officers, make sure that you're promoting stuff like this. These high loan to values, 100% rehab coverage really can stand out in the market and bring more investors to you who will continue to do these deals. So let's put it all together. What does this mean for you, and why should you even care about fix and flip loans? If you're an investor, fix and flip loans are your gateway to scaling quickly and taking on projects that might otherwise feel out of reach. They let you compete in a fast-moving market and tackle renovations without draining your cash reserves. And lastly, they position yourself to seize more opportunities. And this is the big thing that we want. As we scale up, the more opportunities that we see, the more money that we can create. If you're a realtor, understanding these loans is your chance to become indispensable resource for investors. The more you know about creative financing options, the better you can guide your clients, and then the more deals you'll close. Plus, investors are repeat clients. One successful fix and flip will lead to several others, and you'll be the first person they call for every deal that they want to buy and sell. Loan officers, these loans can differentiate yourself in the very crowded market that we're in. By offering the speed and flexibility inside fix and flip, you're going to build the stronger relationships with your realtors and investors, driving more referrals and repeat business. So what's the bottom line? Fix and flip loans are not just about the property. They're about potential and opportunity. You've got this. This is long-term success. So fix and flip are all about turning potential into profit. Whether you're the investor looking for your next deal, or a realtor trying to attract investors, or the loan officer wanting to grow your business, these loans open doors and incredible opportunities. So, as you all know, here it is. If this episode is inspiring you to do something bigger, to get bigger and faster, get this out there and make sure other people can do it too. And as always, thanks for turning in to Beyond the Box, Unlocking Creative Mortgage Solutions, and we'll catch you next time.